Hello and welcome to this Cornerstone Finance Group podcast, brought to you by Business News Wales and sponsored by Halifax for Intermediaries. I'm Gemma Casey, editor of Business News Wales, and in this episode we're going to be looking at intergenerational funding and equity release. How can families work together to achieve home ownership? Well, with me to discuss this are Graeme Lewis, Head of Network Engagement at Cornerstone Finance Group. Hi Graeme.
Hi Gemma.
Gareth Gale, Corporate Account Manager at Halifax Intermediaries. Hi Gareth.
Hi Gemma.
And Wayne Donovan, Mortgage and Protection Advisor with Cornerstone Finance Group. Hi Wayne.
Hi Gemma.
Well, thank you all very much for joining me. Now, first of all, before we look at this issue of intergenerational home ownership, I just want to do a quick overview of the situation out there at the moment for first-time buyers. Graeme, if I can come to you first, tell us a little bit about what the landscape is looking like at the moment for somebody who's trying to get their first foot on the housing ladder.
Well, it can be a little tricky with property prices being so high at the moment. Interest rates have obviously higher than they have been in the past, but there are some really good news stories out there as well. Sales for first-time buyers are up 12% year on year from where they were last year. There's a lot of schemes out there to help first-time buyers with lower deposits, and things appear to be going in the right direction, and long may this continue.
A nice positive message there. Gareth, you represent Halifax Intermediaries. Tell us what you're seeing in terms of appetite from first-time buyers and some of the challenges they might be coming up against.
Absolutely. So the appetite is still massive. In 2024, 54% of all house purchases were for first-time buyers. That's the highest percentage that we've ever had on record. So the demand is absolutely there. That's notwithstanding the challenges. So we spoke about it a little bit more in the last episode, but around both deposit and affordability. And as Graeme alluded to, banks in the industry are working very diligently to try and find solutions to help these customers come on the journey and move into home ownership.
We are going to be delving into some of those solutions and those answers in this episode. So, Gareth, let's get into that now and look a bit more closely at intergenerational funding solutions. What do we mean by intergenerational funding, Gareth?
To put it into context, the average age of the first-time buyer has gone up to 33 years. That's a full 2 years higher than it was 10 years ago. And there's lots of challenges, one of the main ones being deposit. When we're talking around intergenerational funding, it's not exclusively, but it's often linked to that deposit challenge. So whether it be looking at gifting funds from older generation, unlocking wealth that the older generations have accrued over their sort of mortgage life cycle. An interesting stat that we've got last year, if you took Bank of Mum and Dad as a lender, it would be the 10th biggest mortgage lender in its own right. So it's a massive trend, and we probably see it increasing. Where we really want to work as an industry and with our intermediary partners is how can we really unlock that wealth, and how can we use some of that support to helping first-time buyers get onto the property ladder.
So, Gareth, let's look in a little more detail at gifted deposits. Can you explain a bit more what they are, how they work, and what the benefits might be?
Yeah, sure. So gifted deposit allows a first-time buyer to benefit from receiving a deposit from either friends or family, which tends to be the most common option. It's a really good solution in allowing a usually parent pass on that generational wealth. There's multiple benefits that can sit behind it. Reducing the loan to value can help reduce the monthly mortgage payment, which can in turn help the family with budgeting and their day-to-day living expense. And as we see house prices continue to increase, that deposit can really help support getting someone onto the ladder for the first time. It also allows a family and often parents to see their children move into their homes, which is often an aspiration that might otherwise be unachievable.
And what do some of the solutions look like? Are we talking about solely sort of gifted deposits here?
There's a whole host of solutions. We could be looking at equity release. There are later life mortgage products that we can look at. There are also solutions that lenders are coming out with to help with affordability as well, whether it be a joint borrower sole proprietor option. that allows older generations to utilize some of their income to support those who might fall a little bit short. So there's a whole host of different options that are going to be available to them.
Wayne, Gareth has outlined there how there is a wide range of options available. When you have first time buyers coming to you, are they generally aware of these, or are they often coming to you faced with what they think might be an insurmountable situation, a really high purchase price, and maybe they haven't got the deposit? Is there good general knowledge about the different ways they can go about it?
I would say it's a fairly mixed bag, really. In some cases, they just want to know sort of how much they can borrow. So I would say in the first instance, maybe they don't really have a lot of knowledge about certain schemes. They're just looking to sort of find out how much they can borrow based on their income and sort of how much deposit they have saved. So just sort of depending on the client, we can either look at arranging just a sort of standard conventional mortgage, or if they have got sort of a slightly smaller deposit, there are a sort of number of schemes that we can sort of look at as well. Just on the sort of throughout the lenders, like as an example, if you're sort of a private tenant and you've got 12 months rent and you can sort of evidence that, some lenders will potentially lend you 100% loan to value on the basis that, your rent is more than likely going to be more expensive than the rent, or fairly equivalent. In terms of sort of percentage, it doesn't necessarily even have to be a minimum 5%. Some lenders could do, say, minimum 5K, and again, go above sort of 95% loan to value. You've got right to buy for sort of people living in council properties. Help to buy is sort of still live in Wales, unfortunately no longer in England. Shared ownership, shared equity. And quite a lot of the lenders, I think, including like Halifax and Lloyds, are also bringing out sort of different variations of sort of joint borrower sole proprietor type scenarios as well. So there's quite a big range of different schemes to help younger people get on the ladder. The other thing as well is that if you can imagine a lot of their money is going to be going on that deposit, some lenders will also do cashback products. So once they complete, they can have some money back. That could potentially go to sort of first month's bills or home improvements, things like that. Some lenders will potentially lend a little bit more if they are on a 5-year fixed rate. The general idea behind that would be if they're on a 5-year fixed rate, they have long-term stability. Their income is sort of potentially going to go up in that time, so they're sometimes willing to lend a little bit more. So yeah, a number of options out there for people looking to get on the ladder.
We probably haven't mentioned that we see quite a lot, especially in this intergeneral wealth space, is a concessionary purchase. So where a potential first time buyer purchase a property off either a family member or potentially a long term landlord. And that can allow them to move on to the property ladder with effectively no deposit, as another great option that we see a lot of lenders picking up at the moment.
Interesting. Thank you, Gareth. And Wayne, as you say, there is a lot of options there that first time buyers can consider. Talk us through some of the considerations for families if they are looking at these various options. Gareth mentioned Bank of Mum and Dad being a very popular route for lots of first time buyers now. What are the considerations, though, that you would always advise people to think about if they are taking up some of these options?
So if Bank of Mum and Dad were looking to help their sort of children or grandchildren, if they had assets, obviously in terms of like, in inheritance, you're sort of waiting people for past for that money to sort of come down through the family, but you don't necessarily have to wait. You have equity release products, and sort of for mum and dad, they have the enjoyment of being able to help their children now. They're able to sort of see what they do with that money. There is maybe a bit of concern with equity release, some of the reputation from many years ago. But I think sort of times have changed now. There was a statistic that literally came out yesterday to say that equity release lending has increased for the fourth quarter in a row. There are a lot of safeguards now with equity release. You have the Equity Release Council. Obviously, with like a later life client, they want to make sure that there's no sort of coercion, that they understand the terms of what they're signing up for. So you would be required to have independent legal advice. If it was, say, a joint application, you would be in a room sort of individually with the solicitor, just to make sure that you have capacity and you kind of understand, what you're signing up for. The products are fixed for life as well. You would have tenancy for life, so there's no sort of repossession risk. As long as you sort of abide by the terms of the mortgage, you're sort of guaranteed to be able to stay in the property for the remainder of your lifetime. A lot of people will obviously worry about the roll up, especially now, obviously where rates have sort of increased over the last couple of years, but you can service the interest. So, if you're still working or if there is a pension, you can service that interest and sort of reduce the pace of the roll up. A lot of the lenders now are really encouraging that because they're trying to sort of mitigate the pace of the roll up. So they will actually, in a lot of cases, sort of give you a discount on the interest rate if you can service the interest. Similarly, as an advisor, if you had sort of mum and dad looking to take out equity release, there's always a big focus on family involvement as well. Have you spoke about this with your family? How do they feel about it? Are they sort of supportive? If they were sort of worried about the pace of that roll up, you also have sort of different guarantees now. You can get an inheritance protection guarantee. So even though the equity release could potentially roll up over a period of time, what you can do is ring fence a percentage of that equity. So you can sort of guarantee that that will be left behind to the children. And then what would happen then is that the equity release would effectively just be based on the sort of the lower property value. Obviously, that can sort of impact the amount of borrowing available because you're not basing it on the full property value. But if you did want that reassurance that you're going to leave something behind to the children, you do have that available.
And how common are you finding it, Wayne, that people are taking up these options? Is this something that's becoming more popular as house prices are increasing?
Yeah, definitely. Gifted deposit, is quite a common source now. If somebody was sort of taking out equity release to gift, we would also sort of encourage for them just to sort of maybe speak with a sort of a tax professional around sort of any gifting rules, any sort of implications there. But it is definitely common. We had sort of a lady, unfortunately, her sort of husband passed away, and she was sort of feeling quite lonely in the house, and she wanted to be closer to her daughter and her grandchildren. So she took out equity release, was able to sort of gift that to her daughter, which her daughter used as a deposit, and then her daughter basically bought a house sort of closer to her mother, so that the family could be close together. The mother could pop round. She helped out looking after the grandkids, sort of babysitting. So you do get some really nice stories like that.
That must make it all very worthwhile for you, Wayne. Graham, Wayne has given a brilliant explanation there of some of the products that are available and how they work. Now, that's obviously quite complicated and in depth. Tell us a little bit about how the Cornerstone Network supports its advisors and its appointed representatives with the knowledge that they need on these products and also with the links into various lenders and the other products that will sit alongside these kind of schemes.
First of all, I think they've got some fantastic tech that the advisors can use, which means they can check the whole of market to make sure that the product that they recommended to their client is appropriate. And also because it's so simple to use, they can have a proper grown-up, in-depth conversation with their clients, making sure they're actually talking about their wants and their needs, and they're not just concerned or hitting the right button as they go through things. We do a lot of training around these things as well. We've got every Friday there are a presenter that speaks to the network around new products, and these will include equity release lenders and new products that are in the market. We've also got a couple of our advisors within the network that are specialists in equity release. So if there was an advisor who became aware that this was the best source for finding a deposit, but they weren't comfortable with it, we've got ways and means of referring into the company as well, so we can make life easier from that. And I'm sure Wayne would be happy to help with anything as well on the back of that in there, because he's sitting in the office as well. So
Wayne, that is a great suite of support that's there for advisors and appointed representatives with Cornerstone. How important is it for you that you've got all that at your fingertips?
Yeah, it's brilliant. I've worked in a number of sort of different financial companies, and the setup here at Cornerstone is incredible. To be honest, the sourcing system is really easy to use. In terms of sort of getting documents in, we've got the client portal, which is really easy to use for our customers. Quite often people are busy in the day. They don't always have a lot of time to sort of go through, a mortgage application. Not a problem. There's a link that we can send them. They can log on to the client portal in their own sort of free time in the evening. They can upload sort of proof of identity, do a live photo. They can carry out a soft credit check. That'll pull through all of the credit data onto the application. They can upload sort of pay slips, bank statements, things like that. As an advisor, then that will allow us to sort of pre-populate the application, which saves a lot of time, because then when we sort of go through the sort of actual fact find with the client, we've already got a lot of the information in. We've already been able to sort of pre-populate the application. We can just kind of focus a little bit more then on the sort of the priorities, the budget, things like that. So it just sort of saves time for the client, makes it a nice, easy process.
And Gareth, I'm going to come to you for the final word on this topic if I can. From a lender's perspective, how important is it that mortgage advisors understand the different solutions that are available for first-time buyers, and how important is it that they get the right support to really look after their clients?
Yeah, absolutely, it's imperative to our industry. We've all got a responsibility to make sure that we're doing the right thing for our customers and clients. It is a complicated market, but we are the experts as both lenders and advisors. I think some of the work Cornerstone do working with the lenders to make sure that that education is at the forefront is fantastic. And I would really encourage any advisor to take the opportunity to understand all the options that are out there, because although some of the media stats can be startling and scary at times, there are a lot of solutions, and we're here to support a lot of customers.
Well, on that positive note, I'd like to thank my guests Graeme Lewis, Gareth, Gale and Wayne Donovan, and thank you for listening.